The Lal Street fails to hold opening gains to end at the day's low. The Nifty ends below 23,800. Broader markets fall in line with the blue chips.
Tata's financial service arm Tata Capital ropes in advisors ahead of potential IPO in 2025. The decision for listing is in the lines with RBI's mandatory requirement for upper layer NBFCs to list within 3 years of being notified. Sources say that the IPO size is likely to be around 15,000 crore rupees. That's a money control exclusive.
Rupee hits a fresh low. The rupee hovers around 85.18 against the dollar. The pressure on the rupee was expected due to the rise in the dollar index and the expected month-end dollar buying at home. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for Thursday. I'm Reema Tendulkar. With me is my colleague, Vinny. Hi.
Hi, Reema. And I think the markets was quite confused between your dress and my dress color. Green, red, and ended in the red. Not exciting, right? I thought gave up all those gains.
It's given up all the gains. I was a very quiet and range-bound day. By the end of it, the Nifty ended with a cut of about 0.1%. Below 23,750. But what was clear over the last 2 days is the 200-day moving average is acting as a stiff resistance. The 200-day moving average is 23,840, but it coincides with today's intraday high on the Nifty and even yesterday's intraday high. But remember, volumes have thinned out across the globe and even back home in India. Sectorally, it was metals where you saw weakness. PSU banks down close to about 0.5%. IT on the back foot. And on the way up, defense stocks did pretty well. Auto, FMCG also on the buyers list. And the Tata Group stocks. So Tata Motors was one of the big, gainers, at least on the Nifty pack, ending up with a gain of 1.8%. We'll discuss this on Tata Capital plans to go public. So the Tata Group stocks were fairly active. Flat close for the mid-cap index too. The advanced decline ratio, the gap between the gainers and declining stocks narrowed. But by the end of it, it was pretty much on an even keel.
Absolutely. So, yes, we'll be keeping an eye out on how we see the markets moving on Thursday as well. But muted day coming in for the Indian markets as of now. Well, here's a lineup of y'all of what we have in store for y'all on the show today. And we'll start with the top movers and shakers of the day with Vivek Iyer. Well, the stocks of the day is Amber Enterprises. Sudarshan will join in with us to give us the key reasons why the stock was buzzing. And last but not the least, we get you the market opinions we received during the day in our segment Corporate Corner.
And it's over to Vivek now. As promised, he's at the big wall with the top stock movers of the day. Vivek.
Well, thank you so much for that. Like you mentioned at the start of the show, very choppy session, very directional session, if you could call that. But quite a few stocks, especially in the broad end of the market, that saw some wild moves. First on the list has to be Indigo. Again, very strong passenger data coming in. Remember, yesterday you saw a double upgrade coming in from Elara, and the market share gains that the company has seen in the month gone by, something that kept the stock quite buoyed up. Now, the likely upcoming IPO of Tata Capital is something that kept quite a few of the Tata stocks, quite active in the session today. Quite a few of the Tata Group companies, remember, whole stake as far as Tata Capital is concerned, and Tata Investment, at one point of time was at the upper circuit, cooled off a little bit, but the entire Tata Group stocks, most of them saw quite a bit of buying activity through the session. The other pack today that did quite well was the oil and gas pack. Most of the stocks, especially GAIL, IGL, MGL, these were the stocks that saw quite a bit of buying today, and even some of the OMCs like HPCL actually moved higher in the session today. Now, moving on, having a look at one from the pharma pack. Look at Biocon today. A positive news flow coming in terms of a key drug approval from the EU market. Along with that, a clearance coming in for the Bangalore API facility. Back of that stock ended high by almost 4%. And also, Greaves Cotton, this particular stock, we highlighted it earlier in the day, a subsidiary going in for an IPO as far as the EV mobility space is concerned. 7% higher as far as Greaves Cotton is concerned, but quite a few laggards as well. First up, the entire metal rally that we saw yesterday cooled off a little bit. All of the metal stocks today saw a profit booking emerging at the higher levels, Vedanta amongst the top laggards. Also look at Intellect Design. Yesterday, the stock was up over 15%. Today, cooled off quite a little bit. In fact, the top laggard as far as the NSE 500 was concerned. And lastly, Dalmia Bharat. Within the cement space, this particular stock saw quite a bit of selling pressure emerge, especially in the last hour of the trading session, over 2% down as far as Dalmia Bharat was concerned.
Right, Vivek, thank you so much for that. Those were the top movers in trade today. But let's bring on board our guest for today. We have Jay Bala, CMT at cashthechaos.com, as well as Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, joining in with us. Thank you so much, gentlemen, for joining in with us on the show. Jay, very range-bound trading session, right? What we're seeing coming in the last couple of days for the Nifty. The 23,860, 870 is where it's roaming around. What is your view coming in on the Nifty as well as the Nifty Bank?
Yeah, for the very short term, Vinny, the markets are set to bounce a little bit and probably a maximum of 24,800. That's a big stretch, but my ideal objective is about 24,100 and change. So that's the this is a counter trend bounce. Make no mistake of that. And once that is done, the market is likely to drop to the June 4th low. And that's the objective I've been maintaining since the end of September. And as far as the banking index goes, the print of 810 for SBI is not a good sign. Probably a counter trend bounce to about 51,900 to 52,000 or 52,000 max. And then banking index is likely to take lead on the downside. So some more upside in the very short term, but the markets are looking quite weak.
Got that. Let's talk about the Indian aviation sector. Now, the domestic air passenger growth has seen a jump of 12% in the month of November on a year-on-year basis. IndiGlobe Aviation was also in focus separately because Elara upgraded the stock to a buy. The numbers are looking good, right, in terms of air traffic. More and more people are out there in the skies.
Absolutely, and I think let's not forget that this is holiday season as well. So everyone is booking those flight tickets. Maybe that is something also that is supporting these numbers coming in. But as of now, the passenger data, the domestic air passenger data that we have coming in, 12% growth YOY in the month of November. Last month, it was around an 8% number that we saw. First half of the year, 5% growth is what we're seeing. While Indigo, just talking about Indigo itself, 15% growth in the month of November versus last year. Also for Indigo, the occupancy has climbed to 90% in the month of November, as well as the December trends that are indicated right now. That also is somewhere around in the 90% range. Let's not forget this November month for Indigo has been the best in almost 5 years. So it's an interesting number that's surely coming in for Indigo. While obviously Indigo's market share continues to be about that 60% mark, 63.6% in the month of November. Air India, their market share is at 27.3%, which is at 11-month low. SpiceJet, Akasa, they have improved their market share by 60 and 20 basis points respectively. So it will be interesting to see how, the market share also moves going forward. Let's not forget, yesterday this Elara note that we had, double upgrade, buy rating is what they had now from a previous sell rating for IndiGlobe Aviation. Target price of 5,309 rupees. They've raised their EPS targets as well for FY25 to FY27. And a lot of tailwinds, what they're talking about, Rima, is in terms of demand that they're expecting to see. The higher demand, the higher traction in terms of new domestic airports that we'll have in Mumbai and Delhi, that will lead to better volumes, and that will be something that will be supporting the growth. And that's why I think Indigo, being the leader, is seeing a buzz in trade as well.
Indeed, 2 new airports on the anvil, the one in Mumbai and in Delhi. Sudeep Bandyopadhyay is also with us on the show. Sudeep, have you been bullish on IndiGlobe Aviation? Because on one hand, the underpenetration, the fact that the India opportunity is so high is there. But there is also that regulatory overhang, engine-related issues. Then you don't know what's happening with ATF prices. So what's been your call on IndiGlobe Aviation, and are you turning incrementally more bullish?
Well, I think one more factor I'll add to the positives which we were discussing is that ATF prices have remained stable and there's a downward bias. So that also has definitely helped IndiGlobe Aviation. Now, as far as my view on the entire aviation space is concerned, I'm always cautious on aviation. I think it's too volatile a sector. There are too many variables and too many factors which does impact aviation. Of course, there is no doubt about the fact that this is the peak season for airline industry, and they tend to do well in this holiday season. This is one chunk of the holiday season. The other is a summer vacation time. So both these chunk of time they do well. But having said that, considering the valuation where it is, and considering the as you rightly pointed out, the challenges, the aircraft-related issues, and also the competition which is going to definitely come from Air India sooner or later, I would be a little cautious in advising a buy in IndiGlobe Aviation at this stage. I will keep watching. Maybe I'm missing an opportunity, but I'll still prefer to do that rather than jump into Interglobe Aviation at these levels.
And Jay, what's the chart of Indigo telling you?
Yeah, it's quite
Flying
strong.
up or down?
So Sudeep has pointed out a very important point, and he's right about the aviation jet fuel having a downward bias. I'm anticipating Brent to drop to about $65 from the current levels of about 73. So that can give further tailwind. So probably Interglobe could have short-term upsides to work with. I'm not completely sure if it topped out or it's reversed. But I would say because aviation fuels are likely to give some more fillip to the current move, maybe I'm maintaining a slight bullish bias.
Okay, that's a word on Interglobe Aviation. But let's move on the flagship financial service arm of Tata Group, that is Tata Capital, has initiated work on a big bang listing. This is according to the sources from Money Control. Remember, the last IPO from the conglomerate was when Tata Technologies made a bumper debut in November 2023. Money Control's Ashwin Mohan is joining in with us to give us details on this one. Ashwin, what are you picking up?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Merchant Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd percent in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Thank you, and congratulations on that exclusive news. Let's move on to Amber Enterprises, that rallied 6% after sources told CNBC-TV18 the company may be looking to demerge one of its businesses. Sudarshan is here with the details.
So at one point today, Amber stock was up almost 10%, and in the last 2 days, stock has moved almost 20%. So Amber Enterprises had three business divisions: consumer durables, electronics, and railway subsystem. So out of these three divisions, sources say company is looking to demerge the electronics division, and post the demerger, it may bring an IPO for the same, and company is likely to have appointed the bankers as far from the what we know from these sources. Now, talking about the revenue front, in FY24, electronics division had formed 20% of total revenue, and in Q2 FY25, electronics division had formed 30% of total revenue, and year on year it had jumped almost 100%. Now, on the valuation front, Amber Enterprises FY26 estimated PE is 54 times. Now, if you compare peer to peer, for Dixon, FY26 estimated PE is 99 times. And as far as the stock performance is concerned, in 2024, Amber has given positive returns of more than 100%, while for Dixon, returns have been more than 200%. As far as story is concerned, CNBC-TV18 has reached out to management. Comments are still awaited.
Okay, thank you so much for that, Sudarshan. And Amber Enterprises surely buzzing in trade today. But, Sudeep, coming to you for Amber Enterprises, Dixon Tech, Keynes Technology, all these have seen such a good run-up, right? And today also they're managing to sustain and hold on to those levels. When Sudarshan right now is talking about those valuations, they seem pretty expensive. What is your thought on this space?
Right, Vinny. I think these are good companies and showing very good growth. In today's day, you don't get 25-30% quarter on quarter, year on year kind of a growth which these companies are posting. But a valuation of 99 times, 65 times, and all that, I think these are a little too outside our imagination and reach. So I don't think I would recommend a buy in these companies at this stage. Some sharp correction at some stage may enable me to recommend a buy. We find that the growth becomes 70-80% kind of growth they're showing. Then again, these valuations can be justified. Otherwise, I will stay away from these counters, in spite of the fact that they are doing very well and there is definitely growth momentum in these stocks.
Moving on now to PG Electroplast, another big mover. This is after Whirlpool inked a deal with PG Electroplast to source select washing machines. It's a positive for PG Electroplast, and the stock ended with a gain of about 2%. Upasna is here with more. Upasna.
Well, PG Electroplast and Whirlpool, both the stocks remained in focus today as these companies have signed a definitive agreement for contract manufacturing of select models of Whirlpool branded semi-automatic washing machines. Now, PG Electroplast will use its manufacturing expertise with a key objective to make the products at an affordable price point, is what the company has indicated. And under this arrangement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory in Roorkee. Now, mind you that the PG Electroplast is already an existing supplier of Whirlpool's branded air conditioners. Now, this deal will unlock new opportunities for growth, and both the companies will continue to evaluate potential expansion opportunities, is what the company has indicated in their press release. Hence, both these stocks remained in focus today, especially PG Electroplast. We saw a sharp up move in today's trading session.
Absolutely. Thank you so much for that, Upasna. Keeping an eye on PG Electroplast. But Jay, what is your view and thoughts on PG Electroplast? This up move that we've seen today, is that likely to continue going forward?
Yeah, we discussed PG Electroplast a few weeks ago when it was about 700 odds, and I was bullish on it, and still it's got at least one more sequence of higher high to come through, possibly exceeding 1,000. But Whirlpool is not looking that good. It's probably topped at 2449. It registered earlier this year. It's likely seeing a counter trend bounce, and probably PG Electroplast is much better than Whirlpool on a relative basis.
Gentlemen, thank you very much for joining in, and enjoy the Christmas break. A very Merry Christmas to you. We'll get into a break. On the other side, the top corporate voices. Stay tuned.
Welcome back to Markets Forward on CNBC-TV18. And in today's Corporate Corner, Impro gained over 2% after it acquired Fenixys for 90 crore rupees. In a conversation with CNBC-TV18, the management said that the acquisition would help it expand into the European market and see a revenue contribution to hit double digits in the next 2 years from a negligible presence today in the European market. The acquisition is also expected to bring Fenixys margins to the company's level of 20% in the next 2 years. Next up, we also had on the list Keynes Technology. The firm's management has not revised its growth guidance for FY25. In fact, it expects its revenue growth to remain around the 3,000 crore rupees and EBITDA margin to be at that 15% range for FY25. However, the management did provide a guidance for FY28 and expects revenue to hit 9,000 crore rupees by that time. And in a bid to expand its portfolio, Team Lease has acquired stake in TSR Darshaw and Crystal HR. Team Lease's management said that the acquisition will contribute to 5 to 6% to overall profits, even as revenue contribution will be less than 1%. The firm's CEO, Ramani Datti, also said that the priority for the company going into 2025 would be profit expansion.
And let's get you some market opinion. Prep you up for 2025. It's Samir Arora of Helios Capital, who believes the current bull run in the market is more measured than the previous rallies. He's positive on financials and IT stocks.
So our logic is that you will have 2 or 3 main chunks which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
And as we wrap markets forward, we'll get you a collaborative initiative by Grow and CNBC TV18. Our mission is to equip you with valuable insights and strategies to navigate the market and make more informed decisions. We'll help you understand the various costs and expenses you need to be aware of as a trader.
Buy something at 100, sell it at 120, you think you've pocketed 20 rupees, right? No, that's not how it works in the stock market, because there are several other costs to consider beyond just the price of the security. First is the securities transaction tax, which is charged by the government on both sale and purchase of securities, typically at 0.1% for equity delivery and 0.025% for intraday trades. Then there is this GST, which is applicable on brokerage fees, again typically at 18%. So if your brokerage charges about 100 rupee fee, you'll have to pay an additional 18 rupees as GST itself. Then there are these exchange transaction fees charged again typically by stock exchanges, usually a small percentage of your total transaction value. And above all of that, don't forget the brokerage fees itself. These can either be fixed or a percentage of your trade value depending on your broker. So all these costs, they add up. It's important for you to account for them when you're planning your trades.